Most people think giving property to someone you love is simple. Just sign it over and call it a day. But that one decision could cost your family tens of thousands of dollars in taxes they never saw coming. We're talking about the difference between a gift and an inheritance. And no, they are not the same thing, not even close. The tax treatment between these two paths is so different that choosing the wrong one is like handing the IRS a gift of their own. Let's start with the gift route, because this is where most well-meaning people quietly walk into a trap. Whether you hand property directly to a loved one during your lifetime or transfer it into an irrevocable trust, you are doing something that sounds generous but carries a hidden consequence. That consequence is called a carryover basis, which is a fancy way of saying the recipient inherits your cost basis, meaning whatever you paid for the property is now their starting point too. So if you bought a rental home back in 1990 for $50,000 and it's now worth $400,000, whoever you gifted it to now owns a $350,000 problem. The moment they sell that property, capital gains taxes kick in on that entire appreciation gains that built up over decades while you owned it, not them. It's a little absurd when you think about it. You did all the work, held the asset through every market cycle, and your loved one gets handed the tax bill. Now, inheritance is a completely different world. And this is where the tax code actually works in your favor for once. Whether property passes through a will, through intestate succession, which is just the state stepping in to write your will for you when you don't, or through a revocable living trust, the outcome at death triggers what's called a step-up in basis. A step-up in basis means the heir's cost basis resets to the fair market value of the property on the date you passed away. That $350,000 of appreciation we just talked about, gone, wiped clean, no built-in capital gain whatsoever. Think of it like a scoreboard that gets reset to zero the moment ownership transfers at death. Your heirs start fresh, which means if they sell shortly after inheriting, they could owe little to nothing in capital gains taxes depending on any additional appreciation since that date. The irony here is almost poetic. The act of holding on, of not gifting during your lifetime, is often the most generous financial decision you can make for the people you love. Patience in estate planning is literally worth money. Now, a common misconception is that a revocable living trust somehow changes this equation or creates tax exposure. It doesn't. A revocable trust is still considered part of your estate for tax purposes, so assets held there still receive the step-up in basis at your death, just like a will would provide. The practical lesson here is not to let urgency or emotion drive your estate decisions. Consult a qualified estate attorney or CPA before transferring anything, because the difference between a gift and an inheritance isn't just semantic, it's structural, and it has real dollar consequences. Position yourself with knowledge before you act, because the cost of a conversation with a professional is almost always a fraction of the tax bill that an uninformed transfer could generate. Discipline in planning, like in investing, almost always beats conviction without strategy. At the end of the day, the goal of passing wealth to your family is to actually pass the wealth, not a discounted version of it after the IRS takes its cut. Understanding basis, step-ups, and transfer mechanics is the foundation of doing that right. So whether you're planning your estate now or helping a parent think through their options, the single most important question to ask is, are we gifting or are we inheriting? And do we understand the difference? That one question, asked early enough, can protect generations of work from an entirely avoidable tax consequence. And if you're ready to take the next step, whether that's real estate investing, home contracting work, or finding the right lender to get you started, check out our links in the description below.